This is Alan Bush with the Daily Financial Forecast for Tuesday, November 15th. Starting out with the stock index futures, we did get a boost with the 7:30 economic reports coming in better than expected, including the retail sales coming in up 0.8% against the guess of up 0.6%. And in fact, this is the best 2-month stretch for retail sales that we have seen in quite some time. Also, we are seeing the Dow, in fact, yesterday hitting a new historical high, backing off a little bit today, at least from those highs. We continue to believe that the U.S. economy now will probably do better than most analysts are anticipating, especially with the planned infrastructure expenditures. Also, it looks like third quarter earnings are improving. Just a month ago, analysts were expecting earnings for companies in the S&P 500 to decline 1.6%. It now looks like earnings will actually increase 2.6%. So a lot of things turning more positive for the indices, and we continue to be long-term bullish across the board for all of the major stock index futures. Now, moving over to the currencies, the dollar index advancing yesterday to some new highs for the move, just steady today. Seeing the euro currency holding up relatively well after we had some expectations indexes in the eurozone coming in better than expected. Some pressure in the pound with inflation numbers there coming in a little bit weaker than anticipated. And in the Canadian dollar and the Australian, we are seeing one of those rare days where the Canadian is actually gaining on the Australian dollar. But I think this is likely to only be a one-day situation. In fact, this looks like a good opportunity to come in to buy Australian dollars and sell Canadian dollars. We do feel that China's economy will improve, and the Australian dollar, because of that, should overall gain on the Canadian dollar longer term. Now, moving over to the interest rate futures markets, just a little pressure up front, at the front end of the curve. This on rising expectations that the Fed will be raising interest rates at their December meeting. Some short covering at the long end with the 30-year bonds advancing after a very severe downdraft over the last 4 or 5 days. So any rallies we see in the bonds should be used as a selling opportunity. Also, we are fully on board now for a rate increase from the Fed at the December meeting. I think we could see 1 or 2 more rate increases next year. So after being very skeptical about a tightening of credit from the Fed all of this year, now we very much believe that there will be a rate increase at the December 13th, 14th meeting. And of course, that would be a negative for the interest rate futures markets, especially the short end. Inflation expectations, though, which are rising, will be more damaging to the long end. So continue to trade this market from the short side, especially the 30-year bond futures. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.